How are you looking at these numbers?
Well, it's encouraging. We had expected above consensus outcomes. Actually, our exports forecast is 32.7%. So it's very close. That's in dollar terms. Look, I think base effects, as Rich mentioned, are clearly at play. But nonetheless, the underlying trend for trade is still very encouraging. China's benefited significantly from electronics exports, medical equipment, stay-at-home goods. And that seems to be continuing. We'll see from the breakdown of this data, but I would be surprised if that trend has changed any at all, if at all. So I think that continues. And we're seeing imports growth as well remaining robust, showing the domestic economy picking up and continuing to strengthen. So overall, I think this is good data for China, highlights as well the potential for upside in trade for the rest of the region as well.
But we saw how China's economy undershot in the first quarter. Some say that perhaps it's shaping up to be a slower 2021. Could they be wrong?
I think the risks are skewed towards being wrong because, even if you look at base effects, China's economy should grow pretty strongly this year, with consensus around 8% or so, which seems reasonable for growth this year. Now, China has been clamping down on credit growth and leverage, and certainly we expect, for example, next week with the credit aggregate states to show some moderation. But nonetheless, the trend again still seems to be for strength in the economy. Manufacturing has been the mainstay in recent months. I think what we are going to see in the next few months is the service sector and the consumer start to play catch up with the strength in manufacturing.
Mitul, looking at the data in a bit more detail, I mean, if we just take a look, for instance, at the import growth in dollar terms, we've got this figure of what, 32.3% growth in exports there. And that is the highest in 10 years, but that's actually in percentage terms, but actually in value terms, it's probably, because of those base effects, something quite different. One thing which I just noticed was that the import figure in dollar terms actually weaker than the economists predicted. They were looking at 44% growth. We got a figure of 43.1%. Does that tell us anything about what's happening within China in terms of the domestic shift from manufacturing to services?
I mean, I think it's still a strong outcome. I wouldn't read too much into it. I'd like to see the breakdown of the imports, but overall, it still suggests that Chinese economy is doing well. I think what we have been seeing, because of the strength in commodities demand, that Chinese commodities imports have been fairly robust, and I think we're probably going to see that in today's data. And overall, with the manufacturing sector still doing very well, manufacturing imports are still pretty good. And at the same time, a lot of that's been exported out as well. So no, I'm not too concerned about a slightly below consensus imports outcome. I think, as I said, the underlying tone and trend is still pretty constructive for China's economy and positively for the rest of the world.
Mitul, you are our #1 rated forecaster at Bloomberg on the Chinese economy. So the point is, where do we go from here? And are people at the moment perhaps being a bit complacent about the ongoing and perhaps deepening tensions with Washington?
Well, I think it's an interesting development in the sense that the Biden administration was expected to perhaps pare back some of the rhetoric and aggressive action of the Trump administration. That really hasn't been the case. We've seen a fairly hawkish approach. One difference this time round is that the administration is working more closely with allies, and we've seen this statement from the G7, for instance. So I think that tension is not going to go away quickly. There's clearly a lot of focus on what it means geopolitically and the risks in the region on that front. And so this is not going to ease back. But at the same time, we know that the US needs China for climate development and some focus on whether to try and reduce the impacts of the climate change on the economy. So I think you're going to see a fairly balanced view from the administration going forward. So, tensions will be there. That may affect trade. We're going to have discussions coming up very soon on whether the phase 1 trade deal continues or if that changes. So I think, watch this space on that front. It's not going to go away quickly.
So where to for dollar yuan? The two currencies seem to be moving in tandem this year.
Right, and the yuan overall seems to perform pretty well. I think China wants to encourage a relatively firm yuan just to encourage inflows of capital, especially into the bond market. We had a surprise outflow, for instance, from Chinese bonds in March. And I think the reality is that keeping the CFET index, a trade-weighted yuan, at a reasonably stable level, I think will help to encourage inflows back into China. So one thing that's interesting is, when you see the dollar strengthening, you don't see the yuan weaken as much as perhaps other currencies. When you see the dollar weakening, you see the yuan remaining firm to stable. So I think that sort of trajectory will continue. We'll see yuan outperformance going forward, but don't expect to see trade-weighted appreciation. I think stability is probably the key for Chinese authorities.
Mitul, okay, we're seeing this bounce back. Certainly, it's indisputable what's going on in China. But India, of course, with this awful second wave of the coronavirus, they're really enveloping the economy. And how bad is it compared to the first wave? And, people are perhaps saying that we could see a sharp comeback there as well. What's your view?
I think it's certainly a lot worse than the first wave. Now, the real question, I guess, is how bad is it going to get? And I would tend to think, and I think there were some comments earlier about how we may be passing the worst of the second wave. And I think we probably are. We looked at state level data, we looked at city level data, and clearly what we are seeing is that overall, some of the high growth states are seeing a little bit of improvement. Now, I wouldn't say it's a massive turnaround, but the peak is approaching. And I think that's encouraging. Now, clearly there's a health crisis and there's a lot of concerns about the humanitarian issues. But I think from an economic perspective, we're not expected to see the sort of shock we saw in the first wave, where we had a national lockdown. This time around, it's much more selective. The manufacturing sector still seems to be doing well. Services will take a hit. But overall, the Indian economy is still on track to grow pretty strongly this year, anywhere around close to 10% in our view. And I think that's still the trajectory for the economy.
Mitul, looking at the EM universe as a whole, it does seem like risk assets have factored in a lot of the good news already. Is it going to be volatile from here then?
Well, what worries me about EM at the moment, excuse me, is that the case of virus cases, not just India, but across the EM spectrum, we're seeing a pickup in virus cases and perhaps some slowing in vaccinations. So a combination of this means that EM may underperform the growth trajectory that we're seeing in some of the developed economies. And so, for example, the US is doing very well. Europe is playing some catch up. The UK has done well. And EM is struggling really on these fronts. So that's our concern, that may impact EM asset performance going forward. Now, the other issue is the dollar. Dollar's consolidating. US yields haven't been rising as much. So that may be helpful for EM assets compared to what we saw just a few months ago. But again, there are some risks.